Hello traders, it's 8:03 a.m. Chicago time on Thursday, January 3rd, 2019. I'm still training myself to say 2019. I have to make a conscious effort. I would say it's a stage 2 of competence in that realm. Anyway, thanks for joining me again. We've been doing this a long time now, 5 years, a lot of videos every day, and a lot of you have been here since the beginning. I really would like to think that many of you have picked something up and have moved your trading further along. That's the objective. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Hopefully you can hear me loud and clear. This morning, looking across the markets, we really see, uh, following the Apple announcement yesterday, after the close. They announced at about 4:30 p.m. Lower guidance for earnings, for various reasons. For those of you who have trade the news at Convergent, you probably saw that, and I also posted it in the Head Trader channel. The Nasdaq's off 104.5 points. Remember yesterday, the Nasdaq was down 130 or 140 points when we opened, and we finished. We managed to take out Monday's high. So it's we're kind of in a similar situation, except we don't have a gap down. The Dow is off 231 points. The S&P is down 23 points. The market must be quote unquote glitching again. Allocations clearly to safety, away from risk. The volatility index futures for January showing 23.75, up 2.7%. So, and crude oil is higher. Crude oil had a big pop yesterday and retraced some of it, but is higher this morning, up 70 cents, trading at 47.28, 1.59% up. Gold is back up near the 1300 mark, is up 6 points, $6 at 1290, $1,290. So risk allocation this morning to safety. As far as what we're looking at in terms of what's ahead, we did get some eco releases this morning, but we still have ISM New York at 9:45. That's 15 minutes after the open, 9:45 Eastern. I really need to stop flipping between Chicago time and New York time. But some of the information I have in one and the other, and I'm not sure what to stick with. But 9:45 we get ISM New York, and at 10 o'clock we get construction spending, ISM manufacturing, PMI, and then we get the auto sales later in the afternoon. So that's what's on deck for today. Let's take a look at what we expected yesterday. Here's how we were set up. This is really this is the 15-minute. This segment's brought to you by my sneezing fit, which happens to take place when I'm on a trader bite. Yesterday, gapping down on the PMI results that came overnight from China and Europe, and the primary expectation is for responsive buying. In either case, it either gets to 24.85, holds and turns, which is what was expected, or it pushes through, in which case we were looking for 24.97 or so for the point of control. We got a little bit of both. Sorry. Here's what we got yesterday. We pushed up. We were definitely responsive as expected. And sorry, hang on. And we got the turn right here. Rotated down to the mid, to the OS high. Looked good. Looked like it might break through the mid. The mid held, and then we had a very strong impulse up, marked by this rotation right here. Very strong impulse up, 20 points, and that put us right inside of the prior day's range. So now we're expecting the point of control. The trade, the key trade was right there at the pullback to the low mid VWAP in a stock zone area, and looking for the point of control hadn't been taken at that point. So looking for 24.9475. And then it just kept going and going and going. Now you look at this profile from the prior day, and we see that Monday's trade, except for the close, which was kind of crazy for the year end, month end, quarter end, was very balanced with a very valid point of value area. So the next target would have been a value area, and this ended up this kept on paying. So I was looking for the touch of the close, 25.08 and a quarter, hit it to the tick right here, turned around, and then pushed to the prior day's high to the tick, and then rolled over to the IB. Next opportunity for the long is the IB high. Test the IB high quite a bit. Looks like it's likely to fail as the delta moves down, but still it doesn't go to zero, and then we get this break again, and it pushes right through that 25.1275 high and into 25.20, which had a ton of liquidity up there. Tests 25.20 and is unable to take that out. I want to talk about liquidity for a second. I find this really, really useful. I got to tell you, I wish I had this tool when I first started, but you can see that how the liquidity is set up in the book, and this gives you liquidity for as far back. This is a full depth feed, and it gives you liquidity as far back as the eye can see. As I have data, and it goes all the way up and down the book, and you can see that we are getting really, really stacked here between 24.97 down to 24.90. Some of that will be chewed through the market. There's a tendency, for a pretty good reason, for the market to move towards liquidity. The market, at the end of the day, the market's purpose is to facilitate trade, and facilitating trade means that the market tends to gravitate towards liquidity anyway. But just being able to see where it is, you can see that already liquidity is starting to form at 25.30 above, and you can see below it's at 24.47. 24.47. If we break below 24.47. 46 area is a key stock zone area, and it's the breakout area from last Thursday, and that's going to be a key area to test if we break through yesterday's low of 24.67. Okay, so it's just interesting to see not only where the liquidity is, but how long it's been there. If we look at yesterday's liquidity, what's going on here? Looks like I lost some of that data. It's just resets. If you look at yesterday's liquidity, a lot of the stuff that lasted a while, that was there a while, is what ended up stopping the advance. So you could see as the market pushes up, as the market moves up towards 25.20, this turns brighter and brighter and brighter until it gets really bright, and we collide with it and then just roll over. Yesterday we had that big area at 24.72.71 down below. So it's nice to see this because I feel like, well, what I've observed, my feeling doesn't matter, but what I've observed is that it just gives you an idea of where the market might turn. But also, you can see this market maker here overnight just tracing the market at a safe distance. See that there throughout the night, just big orders are shifting up and down this particular order. So there's a market maker in there with size, an algo with size that's tracing the market. That's likely to die out. It's likely to stop when the market opens. But what this does is it gives us a decent idea, or it gives me a little more confidence when this ties in with my zones, with my key areas to trade. Those two combined, the technical aspect, the bias that I have combined with liquidity pools, you have to be able to sit through the liquidity pool getting punched through before it falls through. So it looks like, oh, it's lifted that offer, the big offer. It's pushing through the liquidity pool, and what happens is it exhausts and turns back around a lot of the time. So just an interesting point, interesting to note, kind of a point that I wanted to make. But yesterday we ended up pulling back. We had a normal variation day, pretty healthy auction. However, if you look at the profile, not not a lot of consensus, very jagged, kind of a wood saw type of profile as the market continues its process of discovery from late last year. Here's the overnight session. We carry over into the overnight session. There's the Apple announcement. We open right back up where it closed, and then boom, we drop hard into the 4 o'clock central close session end. So I include that session end as part of the new session. I know that doesn't make sense, but I look at the pit. This is the pit session, and then everything else, everything outside of the pit. And you can see Apple comes in and just drops us pretty hard from 25.10 open to 24.86, about 14 points lost. And then when we reopen at 5 o'clock Central, 6 o'clock Eastern, we gap up some more. And the market's just kind of processing that for a while until we open up, until the Europeans come in and they hold steady, and we've been rallying since then. So what we have again, just like the day before, the night before, a B-shaped profile. The market has moved away from the accepted prices from the prior day, and has been holding steady here. We are tangled up with the mid of that session, the full session mid, and the point of control beneath us. There's like it's a very awkward position to open in, but we are inside of the prior day's range. And so it's anyone's guess which way this thing is likely to go on the open. So that's the review segment. Let's move on to what we've got for today. For today, so let's pull it in. For today, I'm looking for a market that is likely to take that to get back up, not in the SOC. The SOC for the Apple news is yesterday's close. I mean, we closed, they announced, we dropped. So the SOC, the auction stopped at the auction stopped right at the close. So I'm expecting this morning that we're likely to revert. Yesterday had a very wide overnight session that was never tagged. That's a 2.3% statistic historically. So it all day sampled about 2.3% of the time. It does not touch the overnight high or low. It's a very, very rare occurrence, and it occurred yesterday, the first day of the year. And that's because we had a very wide overnight session. really. But the statistic, it's a gross statistic, and it just so happens to fall under the the unlikely scenario, which is very, very possible. So this morning, I'm looking for it to open. I'm looking for an open auction. I'm looking for it to get down and test that overnight point of control. I'm looking for an impulse up for, given what we've gotten over the prior session. I'm looking for this to be seen as cheap again. I'm expecting the same participants to kick in and buy this back up, so that the overnight point of control is likely to be the support here, and then I'm looking for it to revert back. We're likely to get tangled up again at 2,500. This price is getting old, and then we push into the prior day's close, which is this 2 points above the close of the year on Monday. So I'm looking for, on the primary scenario, I'm looking for responsive buying. Okay. Secondary scenario, responsive buying as well. Looking for it to push into the 2498 area, 2500. Looking for it to break through and then fail to hold prices higher and then start to work its way through these levels on the way down, poke through the prior day's low, and push towards the singles that are still open from the 27th. That gets us into 24.58. If we don't bounce up here, then we're likely to drive down to the next area down here at 24.46, which is really a key area to test from the 27th. That's this right here, this area right here. Very important. So that would be the secondary scenario, and more likely the more profitable one, at least for me. But in either case, I'm looking for the market to respond up and then decide. And my job is to wait and see if the response gets carried forward into the prior day's close, in which case it's the first scenario, or if it gets rejected around 2498, 2500, and then we start to roll over. And if I see it roll over, if I see selling accelerate, I see the delta going negative across the board, then I'm going to be looking aggressive to the short side. And if it's the short side, then I'm looking for the prior day's low at 68, and then a break of 24.58 is likely to yield 24.46. So just remember that when you're getting into trades and are itching to get out for 2 ticks. If you're in there, you've taken a risk. If you've taken a risk, then you should you should keep yourself open for the reward. You've already defined the risk, accept it, take it, and that's the goal of having these scenarios. Okay, I'll leave you with that. Good luck today, and I'll catch you tomorrow morning. Take care.